I remember always losing in the stock market. I mean, it just felt like anytime I buy a stock, somehow, some way, I'm buying the wrong opportunity. I'm always losing constantly, just being a loser. And all of a sudden, after years and years of losing and a lot of money flushed down the drain, I finally understood why I was losing all the time. And don't even get me started on futures and crypto. That was also disgusting. I mean, I was the biggest loser. Like, you know how they have the big loser when the guy's fat and loses the weight? I was that guy, but in the stock market. And then I finally understood why I was losing so much. And I'm not gonna say I'm always winning now. I'm not gonna be one of those guys that are posting millions of P&L and 100,000 to 10 trillion. You know, we're not here to lie to people because what those people do actually is to just build FOMO in you, and they want you to gamble and they want to sell you a course. I don't have any of that to gain from you. I'm just here letting you know my experience, and I'm in a couple of discords where people talk about trading and how they're going to trade or what stocks they're going to trade. And I've noticed a very common issue, and that issue was the same issues that I personally had when I was trading and being a loser trader. Now, the biggest mistake people do, and I was people as well, so don't take it personal, is when you get into the trading world, you set this goal of, hey man, like I'm gonna make $500 a day, or maybe you have a small portfolio, okay, I'm gonna make $100 a day, or regardless of what the amount, it's quantifying your success in dollar signs is incorrect 100% of the time for one simple reason is you just don't understand what you're really saying in the sense of making $500 a day on a $3,000 account. It's unrealistic. Or making $500 a day on a $5,000 account, you're talking about getting 10% returns daily. That is basically what you're saying is you're going to turn 5,000 or 3,000 into millions of dollars by the end of the year. If you compound that, you're looking at millions, which is unrealistic. That just does not happen. If you were that guy, you wouldn't be even watching this video. And no one is that guy. It's just no one is. Even the biggest companies, the biggest firms, Jane Street, BlackRock, all these companies are returning 20, 30 on a very crazy year, 50% on the year. That means on a monthly basis, that's like 3%. So you joining with this assumption that you're going to make 10% daily or even like 1% daily gains is just insane. But 1% daily, I mean, sure, like if you really crack the code, it's possible. But it's also not understanding that it's normal to lose. The big firms lose. They have hundreds of traders. They have the craziest models. They have all these different advantages over you, trading within milliseconds, trading in the same data centers as the companies and brokerages that they're working with. It's just unrealistic to set these goals. So how did I stop being a loser? Is I approached my P&L in terms of percentage. And what was my goal on a daily basis? No daily basis goals, because daily goals are just unachievable. So what I started to do is I set monthly, quarterly and yearly goals. What is a realistic amount to want on a yearly? I mean, sure, you can look at the S&P 500. You can see what the yearly returns are. Let's say it's 6%, let's say it's 5%, let's say it's 10%. I know in the last couple of years it's been, running up crazy. So let's say you wanted 20, you want to beat the S&P, right? That's why we're day trading. We're day trading so we can beat, the average market returns. So let's say you set a goal of 15% or 25%, or let's say, you're very ambitious. Hey, I want to increase my portfolio by 50% by the end of the year, which, you know what? With the right moves, if you're patient enough, that is very doable. I'm not going to sit here and say that I didn't have years where I was successful in that sense. I did. I believe one of my best years was around a 66% gain on the whole year. But that is also as I was growing my portfolio, And the more you grow, the less risks you want to take. And when you're working with smaller capital, it's a little bit understandable to take these larger risks. So the first lesson is to look at the gains in terms of P and L in percentage and not in dollar signs. All right. Now, the second biggest mistake I used to make was over leveraging. Now, it's easy to think that the trade is so correct. But the truth is, if you are that correct today, you'll be that correct tomorrow. So why not turn down the leverage? All these futures just scamming. 500x, 200x, 50x leverage. Listen, I'm going to be honest with you guys. I was a delinquent as well. I also ran up the 500x. I did also put my 200 bucks in, and I'm like, yeah, give me $100,000 of margin. We all have these dreams of just finally, being that guy, finally getting that supercar. Like, you're seeing all this constant stimulation on your social media. Maybe I'm him. Maybe it's my turn. Maybe I can finally do this for my family. Maybe I can finally make my parents proud. Maybe I can just go from nothing to something. I'm sorry, but it's not going to happen in that way. It's not. It's really not. And mathematically, the chances are zero. I mean, it's zero. Like, going on 100x leverage or 50x leverage, of course, there's going to be people that say, "Hey, man, I was successful. I made this much money." Liars. The amount of liars in trading is more than the woman you'll meet in your life. If you think women are liars, wait till you meet traders. Everybody is cap on cap on cap. They'll show you these demo accounts, they'll show you Photoshopped, they'll show you all these different things. Listen, if you want to be successful, you have to understand the market works in waves. It goes up, it goes down, it goes up, it goes down. You can't always time the bottoms and the tops perfectly. You will get caught up in trades. And if you're over leveraged, what's going to happen is you're going to get stopped out. You're going to get liquidated over and over and over till you're completely flushed out. That being said, yes, you can leverage your portfolio. Yes, I leverage, but what leverage am I hitting? Five, 3x is where I'm genuinely comfortable, because you're basically saying that this stock or this coin, and by the way, I don't trade meme coins. I only trade Bitcoin and Ethereum when it comes to crypto, unless, we're in the bull market, which right now we're in a bear market. So I wouldn't even trade it in that sense. But let's say if I was, I'd go on a 3x, because it's just unrealistic. Like, if you look at the waves, it doesn't happen where it falls 33% of its value, right? It falls 5% and it picks back up. How many times I've entered a trade and I look and I get stopped out, or I'm liquidated, and I'm like, bro, like, I can't believe it. I'm all sad. I go to sleep, whatever. Oh, yeah, I do whatever I need to do to escape that moment. And then the next day, or maybe next week, I'm like, let me check what Bitcoin's at now. Or let me check what the stock's at now. And it's exactly where I was predicting for it to go. And I'm like pulling my hair out. I'm like, dude, I knew that it was going to go there, but I got stopped out. And why did I get stopped out? Because I was just over leveraged. I couldn't take the bottoms to make it to the top. You just have to understand that once you're able to sustain the moves of the market, you stop being a loser. You just need to reduce the leverage, and you'll see you'll make so much more money. That's what I did. I turned down the leverage, and I had some of the best months of my life. When I had 50x, 20x, 30x leverages, I wasn't making a lot of money. Or maybe I'd print one day, and then the next day I'd get cooked. I'd print and cooked, and I'd just get smoked. I'd get destroyed. I'd be so depressed, broken. I can't believe I blew another account. Until I started reducing my leverage to a 2x, a 3x, a 4x. If I'm super confident, I want a 7x. But also, like, when I'm going on a 7x, that's not a longer term trade. So when I'm in a 3x, I'm comfortable to be in that trade for the next couple months. For example, oil, WTI, crude. I'm in a crude trade right now. And if I wasn't on a 3x, Jeez, bro, like I would have been lost my mind. I would have got stopped out. I mean, with all the Trump manipulation that's happening in the markets right now, we've been going from like $70 up to $110, down to $80, down to 97, down to 83. Like it's just ridiculous. All that's happening is all these people are getting cooked. All the over leveraged humans are just getting thrown in the dust. They had the right thesis, they had the right prediction, but they're over leveraged that they can't capture the victory that they deserve. And you deserve to win too. Just turn down the leverage, turn it down. If you're such a good trader, you'll make so much more money when you turn it down. And if you're not a good trader, when you turn it down, you'll actually realize, hey, I'm kind of wrong a lot of the time, and maybe I need to understand why I'm wrong. What are the fundamentals that I'm doing wrong? Am I trading blindly? Am I buying something after it rallied? That was my third and final mistake that I'm going to share in this video. Is I was trading stock. I remember doing this, and I can't believe I was doing this. I'd open like my stock app and I'd check, hey, like what stocks are doing good today, or what's rallied up 10%. What's rallying, and I'd try to join the rally, and every time I joined the rally, it just crashed. Like, what is going on? Why is it crashing every time I join the rally? Like, am I the tipping point? Well, no, it's rallied already. When it rallies 15, 20%, a lot of the time people are taking profit. And then, you buy into the stock after it went up 30% in the day, and then you're like, it starts dropping on you. Is it really dropping, or is it just, people are selling off, it's pulling back to a correction, a support level? By the way, I'm not like one of those nerds that is going to tell you go chart and do all these like extra stuff. No, it's just about understanding the fundamentals of looking at prices and understanding, hey, I'm a trader. If I bought a stock at 150 and it's at 225, yeah, I'm going to sell a little bit of it. I'm not going to be an idiot. I'm going to sell some. I'm going to take some profit. Now, you're taking profit, but Jane Street, BlackRock, all the big dogs, they're taking profit too, but their profit is actually affecting the charts. This is why people say your exit liquidity. You are entering as others are exiting. And when I say others, I'm talking about the more intelligent. And yes, sometimes you are not late to the party, but that's only if you look at things on a long-term basis. Now, if you're joining the party late and you're hoping for a quick scalp or like a day trade or a week trade, you're probably getting cooked. I was getting cooked. I'd buy a stock when it went from like $6 to $15, and the next day or the next week it's at $11 and I'm losing $4 a stock. And I'm like, bro, how? How am I such a loser? No, brother, it's because the people that bought at 7, they're dumping at 15, and idiots like me back then were buying it off them, thinking that, bro, let's keep the rally going. No, bro, the rally's done. You missed it. Now, it's very rare, but if you do hold for years, or 6 months, 12 months, long periods, yes, sure. It doesn't really matter what price you get in, even if you get into the top of the rally, because there's going to be another rally in the next year or the next 2 years or the next 3 years, depending on the kind of stock. And if it's a stock that's actually in demand, that actually produces something that's actually valuable in today's economy. But that being said, the third and final thing is just stop buying after rallies. Stop joining the hype. If you're not early, then you're late. If you're not early, then you're late. Doesn't mean being late is wrong. It just means that, maybe you can be late, but you have a longer term mindset where you're entering the trade slower. You know what? I'm just gonna throw a bonus in there. That was the final thing. Don't just dump your money into the stock or coin that you're wanting to purchase. What I do is I buy a little bit over the next couple days. Unless it's at such a crazy discount, unless I'm catching it after it just dumped and it just wiped out a lot of leverage traders, then I'm not going to dump. Let's say I allocated 20% of my portfolio to get into this one company. I'm not dumping that amount in one day. I know FOMO is crazy. It's like, bro, like especially if you enter with a little bit, like let's say you get in with your 5% or 10% of the intended size that you were hoping to hold. Let's say you were like, yo, I'm gonna buy $10,000 of Nvidia, and then you buy $1,000 and it goes up by 20%. You're like, bro, I should have bought it all. I would have made so. No, no. First of all, good job. You just made, your 20% returns. There's no need to feel FOMO. There's always another day. The market trades hundreds of times a year. You have, especially on the crypto, you have 365 days a year to trade. Just be patient, relax, relax, keep it humble. If you are that guy, you don't need to feel FOMO. You don't need to rush. You need to stop having this mindset of, I'm going to make $1 million this year when I start with 1,000. Please, it is not real. You are being lied to. Don't buy courses of scumbags that are just stealing your money. Don't buy courses. Any knowledge you need in this world is on the internet and it's public. And if it's not on the internet and it's not public, then people are not telling you or teaching you it for 50 bucks. Brother, please. 50 bucks isn't gonna, no one in the, like, if I had a winning algo, I'm not selling it to a bunch of freaking YouTubers, randoms, viewers for 50 bucks. Are you insane? If I had a winning algo, or if I knew a way to print 30% a month, or whatever these insane things these people are saying, like 100% a month, dude. If you actually had that kind of algo, or that kind of strategy that is so strong, you wouldn't ever sell it to some people for 50, 100, 1,000, 2,000, 3,000. You'd actually go to the big firms and you'd give it to them for millions and millions of dollars, or you can even get, if it's insane, hundreds of millions of dollars. Nobody is gonna give you a trading strategy. Nobody is gonna really tell you how to win. Nobody is really winning as much as they pretend like they are. The truth is, you just have to understand what trading is, what the big firms are bringing in terms of numbers, have realistic goals, enter when you feel like it's the right moment, enter slowly over the couple days or over a week or over 2 weeks, and take it easy when it comes to trading the news. Because when the news comes out, I promise you the big dogs already got in and they're using you to sell. Because when they're selling, when the big companies are selling, they don't want to sell and dump the price, because that's not a good look. That's not a good look. So they'll push out some articles, Bloomberg, New York Times. Oh, this stock is such a buy. These trading analysts saying, "Oh yeah, I think it's going to be at $600 by the end of the year. You guys are going to get it at a discount." No, they're lying. They're using you as manipulation so they can exit their trade. When they're getting out, you're getting in. So the price is not dumping. The price is just staying stagnant. But guess what happens when there isn't any more yous and old me's? That's when it starts to go down, and they're still selling. They don't care. They're selling hundreds and hundreds of thousands, hundreds of millions every single week, and you're just watching it go down. And it's like, bro, why is it going down? Like, dude, I just seen this analyst and he said it's going to go to the moon, and like, dude, JP Morgan said this. No, bro, they're lying to you. They're stealing from you. This is all, it's a P2P, PvP. Whatever you're losing, they're gaining. This is what makes the markets something where people are really savages. The big dogs, they want you to lose. Every dollar you lose is a dollar in their pocket. So you have to be cautious. You have to understand, when people tell you to do your own research, it's not because they want you or they don't want to take the liability. No, bro, you have to spend some time. And now with AI, oh my goodness, brothers, with AI, you really, really, really could do your own research very easily, very fast. Don't be lazy. Don't blindly throw your hard-earned money. I know you guys work hard. I work hard. Don't just dump it. Pay attention. Be careful. This is a lot of money. And even if it's not a lot of money, it's a lot of potential money that could have been something if you just were more careful with it. Just take it easy. No FOMO. I believe in you. If you guys have any questions, drop it in the comments below. And I wish you guys the best, best, best year of trading. Goodbye.